Hello and welcome to the Humble Investor Bull Bear Market Report. My name is Adam Straseske, and here is our agenda for today. We're going to go over the broad market readings, and then we're going to get into this week's operating plan. First things first, let's look at the barometer. We're in a risk-on stance. What we've done is taken things into consideration such as short, medium, and long-term momentum, some fundamental factors and market breadth, added it all up, and we've got this little speedometer here. So right now, most things are pointing us to a risk-on stance. Until we get down here into the red area, we're not so much worried about a bear market. We look at the 12-month momentum. S&P 500 and the MSCI All World ex-USA Index are greatly outpacing Treasuries. Another sign of strength on the longer-term momentum of the market. And here's a look at our correction risk. When we look at the breadth of the market, it's a little bit overbought on the shorter-term oscillator here. It would have been better for the bulls, I think, if we could have seen a strong break to the upside when the S&P 500 broke out. We didn't quite see that follow-through on the breadth, and so it tells you that not as many stocks are participating as they could be in this little leg here in the advance. So I'd say it goes a little bit favorable according to breadth to the bears this week, but we will see if they can hold on. The bulls can hold on and really project this thing higher coming into the next couple of weeks. Here's a look at the weekly chart of the S&P 500. You can see we're still in this trading range, but last week we broke out of this triangle, which is good for the bulls. So looks like we're on the second leg up, and we really want to see how a price behaves in the 2800 level, and then for the bulls are hoping at the 2875 just break through to the upside and forget about this trading range for a while. If we do see that break, we'll be watching very closely to see how price responds afterwards. But this past week, good week for the bulls, up 2.41% for the week, and this is the kind of action that they want to see so we can get back up to that new high. Here's our operating plan. So like preferreds, U.S. large caps, and U.S. growth, and we've got a bunch of swings in there and no scalps at this time. Here's a look at the U.S. large cap and U.S. growth. Both of them were up pretty good for the week, and got the trading range here. You can see looks like we're in the bottom part half of that trading range, about ballpark, and we could be seeing a leg to move to the upside here. So looks like it held within the channel line for the most part. Good for the bulls, but right now it looks good. Oil up 1.41% for the week, and still looks really good. You know, I've adjusted the stop up here to take off a little bit more risk, and we'll see if we can get a break to the upside. But this is just a nice run to the upside for oil, and would hate to let too much of that profit slide away there. So we have adjusted the stop up one more time, and what we'd like to see is a break to the upside above this channel, and that will be a signal to take profits on the upside rather than letting it come down to our stop. U.S. Treasuries down 0.39% for the week. You know, they're holding in this support area right here, and they've been bouncing around here for a long time, and so we really want to see if they can hold and maybe even get a push to the upside, get some lower interest rates for the next few weeks. But you know, as far as bullishness for the price of Treasury bonds, it doesn't look good. The longer they hang around at the bottom of a trading range, the more likely it is that they're to the break to the downside. Australia up over 1% for the week. Australia's looking better, starting to come back, and never made it down to our of course our initial stop or our second purchase range, but you know, price action just got way too weak to leave the initial stop down here in a second purchase range. And just considering where we are in the market right now, we'd like to see this a little bit higher. So looks good for it right now. You know, nice bull bar last week. Looks like again we're on the second price up, second leg up on the move, and we'll see how long that can continue. Brazil up 0.64%. Finally got another buy signal after a couple of weeks of selling, and we'll see if it can hold here. You know, good that it got this buy signal on the moving average, or pretty close to it, close enough to count. It's a weak buy signal. It's not a very strong buy signal, but it is a buy signal nonetheless. So we'll see if it can hold and if we can bust out of this really this tight bear channel here and get some more upside action. Here's a look at the EAFE value index, up 1.34% for the week. Nice bull bar last week, and didn't quite break out of the trading range. This week will be a really telling sign to see if we can do that or not. But looks good for the bulls going into the week. And as far as no new positions for the monthly trender, but we do like Switzerland for the weekly swing. No scalps. And here's a look at Switzerland. Nice bull bar last week. If it does break to the upside, then that will be our buy trigger. So we got a signal right here. We got a trigger, and you can see we tried to purchase this before and never triggered. And so we'll see if it will trigger this coming week. Got a second purchase range down in here. Initial stop down in this range. And with that, have a great week, and we'll talk to you next time.